Welcome to this deep dive. Today we're focusing on a major institution in global finance, the Agricultural Bank of China, or ABC.
Right, ABC, a global systemically important bank for, what is it, 11 consecutive years now?
11 years exactly. And ranked number 3 globally in Tier 1 capital in 2024. I mean, that's a core measure of financial strength, a real safety net.
It absolutely is. And they've got those strong credit ratings, too, from Standard & Poor's, Moody's, and Fitch.
Definitely. It all just underscores the scale, the stability of this bank.
Yeah, it really sets the scene. It's a vital part of that international finance machinery.
So our mission today is to really, get under the hood of ABC's 2024 performance.
Using their annual report as the guide, right?
Exactly. We'll dig into their business areas, the financial highlights, how they plan to create shareholder value, and sort of where they're headed.
A focused look, then, to understand their current state and direction.
Precisely. Okay, so where do we start? Maybe the view from the top, the chairman's perspective.
Yeah, that seems logical. He frames 2024 as a pretty crucial year, part of the 14th five-year plan, and a key time for ABC's own reform and development.
Okay, crucial how?
Well, he talks about this dual focus on stability and progress. Stability is a foundation, but also pushing forward, making progress and serving the real economy. That's their fundamental role.
Stability and progress. Got it. And a big part of that progress seems tied to their roots, doesn't it? Supporting rural revitalization, the real economy.
Well, absolutely. That's not just talk. The numbers are quite striking.
How so?
Well, think about this. By the end of 2024, their loans and advances to customers in county areas, so rural areas, hit RMB 9.85 trillion.
Wow, that's enormous.
It is. And it's not just lending. They have like 55,000 customer managers just for those county areas.
55,000.
Yeah, and they've even got these financial directors of villages in over 40,000 villages. It's a really deep grassroots kind of presence.
That paints a picture of building financial infrastructure right at the local level, and you can see the impact.
Definitely. They reported 14.7% loan growth in 160 key counties that are specifically targeted for this rural revitalization support.
Okay, so targeted growth.
And on top of that, they've got the top regulatory rating for serving rural revitalization for 4 years.
4 years running. That shows consistent high performance in a core area.
Exactly. It's not a side project for them. It's really central, a key strategic pillar. Connects right into China's broader economic development goals.
Right, playing a critical role there. But it's not just rural focus, is it? They also mentioned supporting wider economic recovery.
No, it's broader, too. They've been very active in supporting major national strategies. Things like equipment upgrades, consumer trade-ins.
I saw those national campaigns we've heard about.
Precisely. And they actually report having the leading growth rate among their peers in loans, specifically for those initiatives. So they're actively driving it.
Okay, leading the pack there. And what about the retail side? That seems strong too.
Very strong. Retail loans hit RMB 8.81 trillion. That's up significantly, and they say it ranks first among their peers.
First among peers. What's driving that growth?
A big part seemed to be their support for the private sector. Loans to private businesses reached RMB 6.53 trillion. That's up over a trillion RMB.
A trillion RMB increase just for private firms.
Yeah, and they added 1.35 million new private enterprise customers. Now they have almost 7.5 million. Again, they say that's leading the industry.
So a really broad impact across different economic areas.
Definitely. It underpins their whole performance.
Now, they structure some of this progress around what they call the 5 priorities. This sounds important strategically.
Yes, very much their core strategy. The first one is technology finance.
Okay, what does that involve?
Well, they're really focusing on financing innovation. Loans to what they call strategic emerging industries jumped 22.4%.
22.4%, wow. To RMB 2.57 trillion.
Right. And interestingly, they've also launched these asset investment company or AIC equity funds, pilot funds specifically for tech innovation.
So not just lending, but direct equity investment too.
Exactly. It suggests a shift moving towards more direct support for technological advancement.
That is interesting. Okay, second priority, green finance. Huge topic globally.
Absolutely. And their green credit portfolio grew almost 23%, hitting nearly RMB 5 trillion.
RMB 4.97 trillion, yeah.
And they talk about improving their whole green investment and financing system. It seems, pretty deeply integrated, not just a box-ticking exercise.
Right, woven into how they operate. Okay, third priority, inclusive finance. We touched on rural, but this is broader.
It is. Using the official PBOC definition, their inclusive finance reached RMB 4.66 trillion. Again, they say that's first among peers.
Lots of number ones here.
Well, yeah. And what's really striking is that their inclusive loans to small and micro businesses have grown over 30% for 6 years straight.
6 consecutive years above 30% growth. That's
Very
quite a lot.
sustained. And get this, the average interest rate on new inclusive loans last year actually dropped, down to 3.44%,
Lower rates and higher volume.
while adding over 1 million new small business customers. It really points to a commitment to affordable access.
Impressive. Okay, fourth priority, pension finance. Makes sense with demographics.
Definitely strategic. They're building their ABC pension brand. And it's practical stuff, too, like age-friendly renovations in 22,000 branches.
Wow, 22,000 branches made more age-friendly.
Yeah, and loans to the elderly care industry itself shot up 68%. Plus, pension funds they manage are up almost 25% to over RMB 300 billion.
Big numbers. And they serve a lot of Social Security card users too, right?
Huge reach, 275 million users. So they're really embedded in that whole system.
Okay, a comprehensive approach. And the fifth, final priority, digital finance. No surprise there.
Not at all. Their ABC e-loan balance surged, up almost 35% to RMB 5.73 trillion.
5.73 trillion in just their e-loans.
And retail mobile banking, monthly active users are over 250 million now.
250 million monthly users.
Plus, they mentioned breakthroughs in their core tech distributed core architecture, basically making their digital backbone more scalable and reliable.
So better tech to handle all that growth. These 5 priorities seem really interlinked then.
Very much so, driving growth across the board.
Okay, let's switch gears slightly. How does performance break down between their county area banking and urban area banking?
It's actually quite balanced, income-wise. County areas brought in about RMB 349.5 billion, which is 49.1%.
Just under half.
Right. And urban areas contributed RMB 3361.9 billion, so 50.9%. While rural is core, the urban side is just as significant for operating income.
Interesting balance. And the county areas still saw growth.
Oh, yes. Deposits up 6.7%, loans up 12.3% in county areas, still healthy growth.
And crucially, amidst all this lending growth, asset quality held up. You mentioned the non-performing loan ratio earlier.
Yes, that's key. It actually decreased slightly, down to 1.30%, suggests they're managing the risk effectively alongside the expansion.
Okay, 1.30%. That's a positive sign. So that covers the business segments and strategy well. Let's dive into the core financials now. The income statement first.
Sure. Top line operating income grew to RMB 7.4 billion. It's up from about RMB 695.5 billion the year before. Solid growth.
Okay, good top line growth. And the bottom line, net profit.
Also a healthy increase. Net profit for the year hit RMB 270.69.8 billion, up from RMB 250.1 billion. So both revenue and profit moving nicely.
What drove that? Net interest income, fees.
Both contributed. Net interest income, the core for banks, was up to RMB 581.7 billion. Net fee and commission income also ticked up slightly to RMB 80.3 billion, shows strength in their main banking activities.
So core operations firing well. What about the cost side? Expenses up.
Operating expenses did increase, yeah, up to RMB 254.9 billion, with staff costs making up a big chunk, about RMB 160.5 billion.
Okay, understandable with growth, but you mentioned something positive on the cost side earlier.
Right, the credit impairment losses, they dropped significantly, down to RMB 57.8 billion from nearly RMB 88 billion the year before.
That's a huge drop, almost RMB 30 billion less in expected losses.
Exactly. That reduction would have given a really significant boost to the net profit figure. No doubt. Okay, let's pivot to the balance sheet. What stands out there? Assets.
Total assets reached RMB 43.2 trillion. That's an 8.4% increase. Pretty substantial.
Trillion with a T. What's driving that asset growth?
2 main things. Net loans and advances to customers were up 10.3% to RMB 24 trillion. And their financial investments portfolio grew even faster, up 23.5% to nearly RMB 14 trillion.
So strong lending growth, but an even bigger jump in financial investments. Interesting shift in allocation.
It is. Suggests some strategic moves in how they're deploying capital. On the other side, things like cash and balances with central banks actually decreased quite a bit.
Okay. And liabilities. Deposits still the main funding source.
Absolutely. Total liabilities grew 8.5% to RMB 39.2 trillion, and customer deposits make up the vast majority of that RMB 32.1 trillion, up 7.5%.
So deposits going steadily alongside loans.
Yeah.
And equity.
Total equity attributable to the bank's shareholders also increased, up 6.9% to about RMB 3.1 trillion. So assets, liabilities, equity all growing in sync. Healthy expansion.
What about cash flow from operations? Any quick takeaway there? It was positive, RMB 783.6 billion generated from operations. But that was actually lower than the previous year, which was over RMB 1.5 trillion.
Quite a drop. Any obvious reason?
Could be any number of things, changes in working capital, asset, and liability management timings. You need to dig deeper, but it doesn't negate the overall strong profit performance.
Fair enough. Context matters. Okay, let's look at some key ratios then. Profitability, efficiency.
Right. Return on average assets, ROAA, was 0.64%.
Yeah.
Return on weighted average equity, ROAE, came in at 10.54%.
10.54% ROAE. Decent return for shareholders. Net interest margin.
In AM was 2.16%, and the cost-income ratio was 35.83%. Gives you a sense of their core profitability and efficiency.
Okay, and you mentioned the NTL ratio was 1.30%. What about capital adequacy?
Very strong. Overall capital adequacy ratio was 17.14%, Tier 1 was 13.99%, and Common Equity Tier 1 was 11.59%.
Those all seem well above regulatory minimum.
Comfortably above. Provides a really strong capital buffer against potential shocks.
Definitely reassuring. So, strong financials, strong capital. How are they planning to reward shareholders based on this 2024 performance? Dividends.
Yes, dividends are the main story here. For ordinary shares, they're proposing a cash dividend of RMB 0.1164 per share.
Okay, how much does that total?
Comes out to about RMB 40.7 billion in total.
Right.
And they note that represents 30% of their net profit from the first half of 2024.
A 30% payout ratio based on H1 profit. Clear commitment there.
Well,
What about preference shareholders?
they also got paid. Dividends were paid in 2 tranches during the year. One in March at a 4.84% annual rate, totaling RMB 1.9 billion.
And the second?
Paid in November at a 5.32% rate, totaling RMB 2.1 billion. So consistent returns for pref holders too.
Good to see. Any mention of other ways to return value, share buybacks, anything like that?
Not the excerpts we're looking at here. No mention of preference share redemptions or conversions either, or any share buyback plans during this period. So it seems dividends are the primary focus for shareholder returns right now.
Okay, dividends it is. So looking ahead then, assessing the business moving forward based on all this.
Well, the direction seems pretty clear, doesn't it? They keep hammering those strategic priorities. Rural finance, inclusive finance, green finance, digitalization.
Those 5 priorities again.
Exactly. Given the strong performance there in 2024, you'd expect those to remain the key growth engines.
And their role supporting national strategies. That seems set to continue too.
Absolutely. Their alignment with things like equipment upgrades, real estate stabilization, that connection to national economic goals seems very embedded in their strategy.
And the improving asset quality, that NPL ratio dropping, that's a good sign for future stability.
Definitely. It suggests they can pursue growth while managing risk effectively. That's crucial for sustainability.
Plus, the digital transformation seems well underway.
Yeah, the huge online user base, the tech upgrades, they're clearly leaning into that transformation, which should drive efficiency and reach.
It really does all circle back to what the chairman said at the end, right?
It does. That commitment to the founding mission, focusing on the core business, using targeted finance for high-quality development, it really summarizes the strategy. Feels like more the same focus we saw in 2024.
So, wrapping this up, ABC had a really solid 2024. Strong performance rooted in that deep rural connection, but also proactive support for national goals and big strides in green and digital finance.
Yeah, the financials back that up. A solid, growing institution.
Which leads to a final thought, maybe for you listening. Considering ABC's unique mix, that deep rural focus, the big push into green finance, plus this rapid digital shift, how might that specific combination, that unique position within China's economy, shape its future, its growth path, its impact even on global markets?
That's a great question, the interplay between those factors.
Yeah.
That's definitely something to watch going forward.
Indeed. Well, thank you for joining us for this deep dive into the Agricultural Bank of China's 2024 report.
My pleasure.
Until next time.